Hi, and welcome to our podcast, Good Deeds Real Estate with a Mission. I'm Diane Davidson with the Fine Homes Group at Keller Williams, and I'm here with my business and life partner, Bill Weidacker, back from Orlando.
Well, hello.
Nice to see you home.
Yes, Magic Castle is still intact.
You took your ears off.
I think it's official. All of the warning and restraining orders, all of that has officially been lifted at Disney World for me. I'm allowed back in the park.
The restraining orders, why?
Because I get too crazy. I hate waiting in line.
Oh, okay.
They're like, sir, if you're going to get mad, you got to leave.
Okay.
It's the happiest place on earth.
When you're on your way out.
When you're not here.
So, despite my age, it's that time of the month.
Yes.
My favorite.
Well, it's my favorite as well, because we're going to talk
numbers
about market stats.
Yep.
And I have been saying for the last 6 months, we do not have an inventory problem because you can't have a record amount of sales, which we had last year. It's 6.1 million homes sold in the country. You can't have a record year and not have enough inventory.
Right.
They don't go hand in hand. There's just no standing inventory. Well, the numbers for us this year, Diane, in New Hampshire, are starting to tell me if you're a home seller at all in the next 12 to 24 months, there's never been, in my close to 40 years, 39 years of selling real estate in New Hampshire, there has never been a better time to be a seller.
Correct.
And, it's a good time to be a buyer as well, but there's never been a better time to be a seller. Here's why. First of all, closed sales are down almost 18% year to date versus last year. And that really comes down to this. There were about 1,900 home sales through the first 2 months of last year. There's less than 1,557 this year. So we're 18% off. And that's going to continue. Do you want to interrupt?
Because? Let's ask questions.
This gives me a chance to take a breath. It's because pending sales are off about a little more than that. They're off almost 19% year to date, which means this. They're going to close in the next 30 to 60 days.
Mm-hmm.
And so if they're off 18%, we're going to see the solds be off the same amount. So we're going to see through the first 4 months of the year, closed sales off by close to 20%. Standing inventory right now, if the entire state of New Hampshire, there's less than 1,000 houses for sale, 928. Now, to put some context on this, we're talking last year at this time, 1,300 properties. Now we're less than 1,000. A few years ago, we had 5,000 properties to choose from. 2013 or 2012, we had 10,000 properties to choose from. So we're less than 1,000 properties. Here's what that means. It's about 3 weeks worth of inventory. 3 weeks. If nothing else came on the market in 3 weeks, it would all be gone.
And there are towns now with literally not a house on the market, correct?
I ran some here's a scientific report. This is what Excel looks like now. But I ran a report just prior to doing this. Bedford, there's 11 houses on the market in the entire town of Bedford. Now this is a population of 22,000, 23,000 people. So 11 houses for sale. Now Manchester, the population is about 110,000. And in Manchester, it's a little better. 16 houses on the market. Hooksett, 4 properties on the market. Merrimack, 2 properties. So if you had a decent coffee break, we could see the entire inventory of Merrimack during your coffee break. I've never seen this. Never seen this.
No.
Goffstown. You're not buying in Goffstown, even if you pay any price, because there's no active inventory right now. 0 houses for sale in Goffstown. Now that changes from day to day, but right now, half an hour ago when we ran this report, 0 active listings. So be not afraid, because I think what this means is that it's highly opportunistic for sellers.
Absolutely.
And the sellers that were thinking, well, I was going to retire in 2 years and get that house, they might want to put the cash on the sidelines, and this may drive them to do it more than ever before.
Mm-hmm.
More than ever before. So What can I answer for you so far that,
So what does this all mean? When does it, I don't wanna say end, when might it change?
where does it go?
Yeah,
Continued appreciation, in some cases, in some towns, maybe rapid appreciation, followed by a sudden stop. You know, they used to say that in the car racing business, it's not the accident, it's the sudden stopping that's most painful. And I really believe this, is that if we see a sudden stop, that's gonna be because prices have appreciated and interest rates have gone up as well. And we're seeing that. Interest rates are about a full percentage point higher than they were a year ago. You know, we're talking about a 30-year fixed rate around 4%. And so that to me is not stopping anything. And we think the Fed is gonna raise the rates 25 basis points or 1/4% next week. And I think the markets, the mortgage market's already priced into it. I don't think we're gonna see very much change in mortgages next week. Now, if I'm wrong, I'm wrong. But even if we see a tick up in mortgage rates, I don't think it's enough to change the buying frenzy that's going on right now.
well, not right away, because on average, most properties have anywhere between, 10 and 15 offerers that don't get the house. So
Mhm.
there'll be plenty of that pent up demand still to absorb whatever inventory comes on the market, provided you still have to price it right. There's the houses that are on the market in Bedford, for instance, many have been on the market for a while
Mm-hmm.
and will probably stay on the market for a while unless they adjust their expectations.
Yeah,
right
this
away.
isn't, look which way the wind's blowing and ask any price.
Exactly, yep. Even in this market, you can overprice.
Well, the broker that originally hired me years and years and years ago used to say this: in any market, sellers will eventually find a price for property at which it will not sell.
Yep,
It's true.
absolutely.
And I don't mind people being ambitious. It's just we are going to come to a final number where buyers will say, "Yeah, that's too
Yeah.
much."
Yeah. Yep.
And you bring this up about sellers asking too much. The affordability index comes into play here. A year ago we were running at about 116 as an affordability index. Now we're running year to date at 97. For February it was 96. January 98, so the average is 97. But we're 96 versus a month ago at 98. What does that mean? Well, when the index is over 100, it means that people are making more money on the median income is more than enough to afford the median priced home. Now at 96, it's 96% of enough.
Mm-hmm.
That does not mean that people can't buy houses, because median, it means 50% of those out there are making more than that to make it a median. 50% are making less. So we are going to start to see these factors come into play. Interest rates, prices, and the affordability index all have a role. It's going to be interesting. When the punch bowl gets taken away at the party, I don't know. But it's going to happen. So if you're going to sell now.
Sell now.
Sell now.
Best time in history.
I've not seen a better time.
Me either.
I'm 40 years of personal experience. I've never seen a better time. And I'm willing to bet that there hasn't been a better time in the last 50 or 60 years. There just has never been a standing active inventory quite like this.
Like
And new construction is not coming into the fray fast enough to make up that gap.
Yep, we're years behind, right? Millions of homes behind.
Correct.
Yeah. All right, well, thank you. So this is like a little, peek into the vision speech. I want to plug that again. So
April
it's
6th.
April 6th, Manchester Country Club. What time? We don't know.
I think it's 4 o'clock.
Okay.
We're going to open the bar at 4 o'clock.
Okay, so 4 o'clock.
Yeah.
4 to 5.
It isn't just about what we're talking about here. There's a whole host of things that we talk. We're able to go kind of really deep into the economics of what drives this country
Mm-hmm.
and what drives this market. And so you're going to come away with a lot more than just what's my house worth in this market, and will I be able to buy a house a year from now when I get out of college, or when
Yeah.
I get my big job.
Oh, it's
A lot to
great.
cover.
It's so informative, and we're sorry we missed last year, but great to have it back, and I'm looking forward to it. And so if folks are interested in attending, they should reach out to their Fine Homes Group team member or their or KW Metropolitan
Yes.
Realtor of choice, right?
And it's really, it's an open book exam at the end. It's not hard.
But is it an open bar in the
That's
beginning?
what's open.
Open.
It's
in
not
the bar,
the-
not
yeah.
book, yeah. Okay, well, thank you.
You're welcome. My pleasure.
Well, that's it for today. Please be sure to subscribe to YouTube or follow us on your favorite podcast platform. Thanks.